Good morning and welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of December 15th, 2025. Let's get started. SEAF signals for this week. We retain industrials, tech, and we now have healthcare. So it's industrials, technology, and healthcare. Industrials remains really strong. It's kind of, we've seen a nice run through industrials. We're seeing a nice score of 7. Obviously, with technology and healthcare showing a little bit weaker on the trading week, 11 actually for healthcare and 7 for technology. Honestly, just we're kind of in that weird transitionary period. We'll see a little bit here in a second with the heat map, but just looking at the way the thing is distributed, we're kind of still in that transitionary phase. We're bumping up against all-time highs in the S&P 500, and I just think the market is trying to figure out what's next. Obviously, you can see here with this kind of differential here, we got with healthcare, technology, and industrials. It's not really a strong signal in a defensive or offensive mindset regarding regarding assets in the S&P 500, showing a little bit of positive momentum here in financials, going from 11 to 7 to 1. We'll look to see how that's working out a little bit later, and consumer discretionary here coming at the bottom. Heading over into our heat map here. Like I said, really not seeing a lot of consistency across the board in terms of asset flows. We're, again, a little bit of a transitionary period. Financials coming in at the number 1 with a 0.28, so not super significant. And while healthcare was 11, that was only a negative 1.4. So pretty quite far off significant. Now it is deep red just because it was a lot of flows. Last week we had a Fed decision, so I think that kind of stymied some of the normal asset flow that we normally see. 3 of 5 days were down last week in terms of asset inflows into the 11 sector spiders for a total of 0.45%. We've been getting a little bit higher net numbers as of late, but kind of with those mixed up and down days, just not a lot of asset flows in general. Like I said, I do like to see this positive skew here for financials. And industrials remaining nice and strong. So that is definitely good to see. Financials in our rainbow charts here, just kind of wanted to highlight, we are seeing that positive skew. We are seeing a little bit of a turn up in the relative outperformance versus SPY, despite this thing kind of being buried here in the avoid. But we headed up into neutral. And again, we got a 1 on the trading week, 7 on the one on the trading week, 7 in the tactical month, and 11 on the strategic. So this thing is a little bit buried, but we are seeing some nice life out of financials. And as we're heading to neutral, this is kind of lead off territory here. Now, again, the SEAF model does not project. We had a couple of questions over the weekend at our teach-in about why we're in certain sectors and why we're not in other sectors. This model is relatively hands-off, as in my opinions on the market, my opinions on the sectors are really kind of taken out of this, and this is really more focused on the data and how the asset flows are coming in. Again, we track, for those of you that are new, we track asset flows through 3 time periods. We got our trading week, tactical month, and strategic quarter, and we're really tracking what's the momentum of those asset flows through the 3 different time periods, and through that we give that a ranking score, and those scores then get made into a master score, and that master score is kind of how we rank these things. It's kind of like a golf score. The lowest score is best, and we always take the top 3. Do we always, and again, we take the opinion out of it. So, whether I like technology right now or whether I think it's overvalued, or, healthcare took a little bit of a turn for the week, we really kind of take that bias out of it and really are just following the money. And sometimes that means we have some sectors that are highly ranked, like we have industrials, and sometimes we have some that are a little bit lower ranked in terms of technology and healthcare. But what we don't know is what's going to happen in the future. So we just want to position ourselves by being in the asset flows, or being in the sectors that have the best asset flows. And sometimes that puts us in a situation like we are in healthcare, where tactically and strategically, a lot of assets were flowing into healthcare, and we get a little bit of a reversal here on the trading week. Again, what I don't know, though, is that was that a little bit of profit taking? What was that wiggle? And what we don't want to do is start trying to game the model out by picking some signals and not picking others, because choosing to stay out of a certain sector because we don't like it or it had a bad particular week, even though it's still a ranked sector, could mean missing a trend or starting to fall behind. We've pretty extensively backtested these models, and being in the top three oftentimes puts you in the best position, and that's why we did that. So going over to our technology. So technology still remains favored. We had this nice little run on relative outperformance versus SPY. A little bit of a turnaround, but not very much. And still looks like it's a pretty good place to be. So that is technology. Going into industrials. Industrials has been great. We've had this nice relative outperformance move going back to last month. We're sitting into upper favored. Right now doesn't seem to be any weakness in industrials. Continues to be a good place to be. So we're going to ride out that trend as long as we can. Now looking at healthcare. Healthcare had a little bit of a fall off here, but we found some support. These relative outperformance lines here, relative outperformance levels here, looks like we found a little bit of support at those. Again, could it have been healthcare has been down for quite a bit of time. I don't have here. This is the chart goes only back a year. If you were to extend that out, you would see a really kind of a steep decline in the relative outperformance versus SPY. So this is a nice little run up that we caught here with healthcare, and healthcare holds on. So what we don't know is if this trend continues and we see more asset flows coming out of healthcare next week, that will probably propel us down into neutral, and we might cycle off of that. Asset flows could rebound and we can get a really strong move and continue this nice relative performance uptrend that we have really going back to late September, early October. And that's healthcare. And I did forget total sector spider AUM. So we're going to finish with this today. Well above its 21-day moving average, testing kind of this all-time high at 340 billion. We've had a nice positive price appreciation since we've been above that 21-day moving average. And so right now, as of things are looking good for the S&P 500 if we take account of this chart. Now, all indicators are not ubiquitous in terms of their coverage of the broader market. So, am I saying that the market's going to be great as long as it's above the 21-day moving average? No, but as a singular tool and a singular snapshot of the broader market, this total sector's AUM is looking relatively strong, and potentially good things for the market when we start to cross down below this 21-day moving average, as we had a couple of times here. You can see we've got some negative price appreciation. That is all I have this week. I look forward to breaking down the SEAF model with y'all next week, and thank you.